What if I told you that every single minute over $5 million changes hands in the Forex market and you can tap into that flow? Hey, I'm the Greek Fib, and in this video I will break down how this $7 trillion a day marketplace really works, so you can start trading confidently from day one. So, first off, what is Forex? Forex is the largest and most liquid market in the world, trading on average about $6.6 trillion per day. Now, what that means for us as traders is that we are never going to have a problem getting our orders filled. Forex is a global marketplace for exchanging national currencies. And in Forex, we trade currency pairs, which we will cover next. This currency pair is nothing more than the exchange rate between two different countries, and this exchange rate fluctuates up and down based on the different strengths and weaknesses of an economy for a specific currency, along with many other factors, and as traders we use information that we gather from technical analysis and fundamental analysis, along with news events in order to predict these fluctuations in prices and trade accordingly. Now, as I just said, Forex is traded in something called a currency pair. The very next thing we are going to do is take a look at what is a currency pair. A currency pair is exactly what it sounds like. It is two separate currencies in a pair, and we use this currency pair to determine the exchange rate of two separate currencies. To make this more clear, you can see on the screen we have the Aussie dollar, and what I will do is I will also put a screenshot of every three-letter abbreviation that equals to a specific currency. So, in this case we have the AUD, which will be the Australian dollar, versus the USD, which will be the United States dollar. In a currency pair, the first currency in this pair is what is known as the base currency, and the base currency is always equal to 1. The second currency in a currency pair is what is known as the quote currency. So, the way to look at this, it takes one Australian dollar, and if I have one Australian dollar, I have roughly 65 cents of United States dollar. So that means it takes roughly 65 cents USD to equal 1 Australian dollar. Stick around, later I will show you exactly how to choose the right broker and platform to execute these trades seamlessly. Let's do this one more time with another example. On the screen you can see that we have the euro versus the dollar. So if we have euro versus dollar, which one of these is going to be the base currency? That's going to be the euro. That means the euro is going to be equal to 1. Then we have the dollar, which is what it's called the quote currency. Since the dollar is the quote currency, that means it takes 1.0713 USD to equal 1 euro. Ready to see how this all comes together when you place your first trade? Let's move on to brokers. So, what is a Forex broker? A Forex broker is just a financial services company that acts as a middleman between us as traders and the Forex market itself. It's how we actually place trade. In terms of Forex brokers, there's plenty of options out there, and the only thing that I'm going to say here is that you want to make sure you find a regulated broker that's regulated in a country you have heard of. So not a broker registered in the Cayman Islands when you are risking losing your money. As long as you have a broker that's registered and regulated in a reputable country, you are in the clear. The other thing you want to look out is for competitive spreads. Spreads are how brokers make money, and you want yours as tight as possible. Outside of that, choose a broker that fits your personal needs. My personal broker is Think Markets, but pick one that works best for you. The next thing you are going to need after a broker is an actual trading platform. You have probably heard of MetaTrader 4 and 5, but my favorite is TradingView. In a moment I will show you how to link your broker to TradingView so you will never miss a trade. To connect your broker to TradingView, come down to the trading panel, click See All Brokers and pick yours. If it's not on the list, you will need to use their native platform. Platform switching kills trades. Keep everything under one roof if you can. Now that you know a bit about brokers and platforms, let's talk about pips. So, a pip is how the Forex market moves. It stands for percentage in point, and it's always the fourth decimal place on the non-GPY pairs. For example, on Euro USD, the 9 in 1.0709 is 1 pip. If it moves to 10718, that's 9 pips up. That same concept applies to all pairs except yen crosses, where the pip is the second decimal. On USD GBY, if it moves from 139.99 to 139.97, that's 2 pips down. Pause this video and calculate. If Euro USD goes from 1.0709 to 1.0734, how many pips? So, now that you know what a pip is, what is a pip worth? It depends on your position size. Nano lots is 1 cent per pip. Micro lot is 10 cents per pip. Mini lots is $1 per pip. Standard lots is $10 per pip. Want to know exactly how much you are risking per pip? Let's use a position size calculator to make it effortless. Head to my FX Books position size calculator, enter your pair, account size, risk percentage and stop loss pips, and it will spit out your precise units or lots. A stop loss is simply the price where you admit you were wrong and exit the trade. Pick it just beyond the structure or candle wick that it validates your setup. Now, let's break down leverage. Leverage is simply your maximum buying power. 10 to 1 on $10,000 gives you $100,000 in units. 50 to 1 gives you $500,000 in units. If you have $10,000 with 10 to 1 leverage and want to risk $500 on a 43 pip stop, can you place that trade? Think about your maximum buying power before you answer. Leverage does not let you lose more than your account. Excess positions will hit a margin call first. Learning these Forex basics is a great start, but to make real money, you must master 3 skills. Strategy, risk management, and mindset. If you made it to the end, hit like, subscribe, and drop a comment with your biggest aha moment. Good luck on your trades, and I'll see you in the next video.